Good morning, everybody, or good afternoon, whenever you're listening. Welcome back to Right Think, and I have a fantastic guest on today who has been looking into something I know which is of very great concern to a lot of you, which is digital ID. So I'd like to welcome Miles Harris to the show. Welcome, Miles.
Hello, David. Great to be on. Thanks for inviting me.
Yeah, thank you so much for joining. And, you know, a lot of people are very, very concerned since Keir Starmer announced in September that everyone would have to have a brick card digital ID. And, I've been talking about digital ID for a long time. You have as well. But the thing is with you, you're looking in a lot more detail and looking really under the surface of what this means. And I just wonder if we've been led astray somewhat by believing or being led to believe that this brick card is what digital ID is all about. But is that all there is to it, or is there a lot more to it than that? And the things that you've been talking about.
Yeah, so when it comes to digital ID, really what they're using is this government one login system, which was created by the government digital service a good number of years ago. So it's actually been rolling out in the background anyway. So the announcement from Keir Starmer was really just a red herring, and it was a clear distraction, really. And I think going back to 2020, 2021, that period there, I think when it came to the notion of something like vaccine passports, I think what that helped to actually ferment in many people's minds was the notion of something which was optional, something which you could download and choose whether to actually participate in or not. And now the announcements in September, I think, reinforced that perspective, really, that people could actually choose whether they were actually going to participate or not. Unbeknownst to many people, they'd already signed in to the government one login system when perhaps applying for a new passport. Or, most recently, what we've seen is the drive with company directors and military veterans as well, which is all going through this platform. Now, what they ultimately need is a single unique identifier. So they want that to be an interoperable means of actually identifying a robust form of identity, and we'll see why that's so important for what is actually taking place in the background very shortly, I'm sure.
Yes, so this idea of a single unique identifier, that's it's something you say is interoperable between different platforms, and it seems to me this one login that you mentioned is going to replace different departments having their own systems. So, the DVLA doesn't know what HMRC is doing. They don't know what the welfare department's doing. They don't know what the education department's doing, but they're all going to be able to see what everybody else is doing with you and look at your entire record of interactions with the government. And will that go beyond the government as well, into the private sector, into, banking sector, and into, this credit referencing agents like Experian and so on?
Yes, absolutely. And I think they're going to become more and more devious about the way that they actually integrate these, what will become ultimately identity tokens. Now, that will then function within the Gov wallet. Now, the Gov wallet will then provide the the kind of essentially like the key to then ensuring that you can actually participate in this system. And then if you consider know your customer standards for these big corporations, well, that's really the padlock that then is unlocked by your digital ID token. So you can consider on one hand the identifier, which is established, and it's high quality ID that is actually provided. Then you've got the Gov wallet, which will then enable you to actually verify your identity, whether it's a public or a private sector participant there. So I think that's where this is all heading. But I think what they're also going to use increasingly is the private sector to identify people as well and share that information, provide a token which can be used within that same wallet.
I think the question people are asking as well is, why do we need this? Because we've never needed this before. You know, I've lived my entire life without having digital ID or even digital verification, which is maybe slightly different concept of digital ID. But now they're trying to move us all so that, you know, ultimately we won't be able to do anything without a digital ID, which, you know, up to now, if you wanted to, you can use cash, you know, and you can just get on with your life, and that's becoming increasingly difficult. But why do people want to do this? I mean, it just seems like, you know, to me, completely pointless, but somebody somewhere must have some reason and is going to gain something out of it. What do you think the reason for this is?
Well, I think the key element is really about that interoperability layer. And when you actually understand the developments that are taking place within the financial system behind the scenes, then you start to really see the bigger picture. Because, of course, he wanted to lead us towards this idea that it was going to help curb migrants and police that whole situation, which is, of course, absolute nonsense. Now, on the very same day that Keir Starmer made that announcement, the Bank of England, in concert with 6 of the major retail banks in this country, so the likes of HSBC, Lloyds, and so on, began a trial for tokenized bank deposits, tokenization of the remortgaging process, and tokenization of government debts, government gilts in this country. And that is, as I see it, the real reason behind this.
Now, this is a word you talk about a lot, and I've heard a lot of other people speaking about this, but I've been trying to understand it, but it's difficult to understand because it doesn't seem to make any difference as to how I would interact with my bank. But behind the scenes, everything is changing. And, you know, I hear worrying things like, well, your mortgages are going to be tokenized, houses are going to be tokenized, public assets like parks and libraries and leisure centers, they're all going to be tokenized. But what does that actually mean for people in their everyday life?
Yeah, so when you think about a token, perhaps the easiest way to actually understand it is if you go to a casino and you put down your money, then you get a respective value of tokens, which are representations of that cash asset that you've actually just deposited. So in the digital world, however, a token is a digital representation of an asset. So they are trialing the bank deposits first. And as you say, that's going to mean that from the front end, when you actually open up your app, your banking app, you won't notice any difference. It will still have the same deposit value that was actually within your bank. But essentially, it moves your bank deposit onto a parallel system of tokens. Now, these are digital, so it means that they can move very, very quickly. They're all on a blockchain ledger. So that means that there is an entire history accompanying every single token and its movements, where it's been, what it's being used for, and so on. So it becomes a medium of exchange with a memory. Now, that, of course, therefore means it's not fungible. It's not like cash, where it offers privacy, for instance. So that is a real step change. Now, the speed with which they can move is significant. Well, it's instant, basically. And that's another profound movement that is taking place here. So every token, whether it's a token for government debt or whether it's for cash, so your bank deposit, contains 2 things, really: information and rules. So the information is what the asset is and what it's been used for, as we were saying. and then the rules could be how that is allowed to actually be used. Now, of course, in the context of digital ID and know your customer rules, then there's the whole background of that information which accompanies these tokens. So it can then determine via programmability within those rules how those tokens can be used. And that's what's the really worrying aspect here.
That's getting to the heart of it, isn't it? Because along with discussions about digital ID, you hear about social credit systems in China. You hear about even private app organizations in India, where there's like, over 1 billion people on one app. That's become the standard. But then if you get kicked off that app, if something happens that you get a flag in your wallet that says, oh, well, no, you're not allowed to use your money, that person's blacklisted, then there's really very, very little someone can do, and they're completely excluded from society. And is that a risk in the UK and with the new system of tokenization coming in here?
Yes, that's obviously a clear risk because there is just one single point of access to this system, and that's intended to be your interoperable digital ID.
So cash, I love cash. I mean, it's not perfect because it's still in some ways, looking into it, an illusion that's created now as a counterparty to debt. But as you said, it does give you privacy, and there's no one telling you if you've got a stack of notes in your hand. No one is going to say, oh, you can't use this. You can do whatever you like with it. But then with this system, you can be just excluded immediately. We've seen that already before, in Canada with the truckers against the lockdowns. Their bank accounts were frozen; they couldn't use their money. So that even happened before this system. It's going to be even harder, to avoid that if the system comes into place. And you were talking a lot about this single unified ledger, which I guess is explains how it all works behind the scenes, which I'm still trying to get my head around. But if I put up this chart here, which talks a little bit about how this works, it's a graphic of the new financial system. Can you sort of tell us how this works and how it's different from what we have at the moment?
Okay, so the way the unified ledger works is right now we have separate siloed ledgers in the same way that we have separate siloed digital IDs, whether it's across passport, HM passport, or whether it's via DVLA, etc., etc. With the system right now, you have all these different ledgers for each of the different banks, and then they get reported to the central bank. The same for government departments, which will have their own ledgers and so on. Now, what the unified ledger really does is take those individual siloed ledgers and unifies them ultimately. So it's as simple as that. Good analogy, I think, to understand that is if you consider individual websites, which on their own, you would they just operate on their own essentially, but the internet connects all of them. So the idea is that you have an interoperable system which can be overseen by the government and the central bank as well as regulators. So that is the notion of the unified ledger in essence.
So it's like you've got on this picture 7, 8, 9 different things, but they would all their information will be pulled together on a single platform that everyone can access and see.
Well, not everyone, just the central bank and the government and the regulators. Yeah, so there isn't that transparency, and that's obviously a key point there in comparison with, say, a public blockchain like Bitcoin, for instance. So the unified ledger, what they are building initially is really around this notion of a holy trinity to start with, but this is built for function creep. It will expand, and we've heard the likes of Larry Fink from BlackRock talk about the idea of tokenizing everything. Just going back to what I was saying about tokenization, it means everything is then happening on a parallel system. which can move at speed. So it would mean any sort of interbank transfers between Lloyds or HSBC would happen instantaneously, because they're effectively then taking place on the same ledger. So the holy trinity that I mentioned there is about central bank money. So that's effectively a CBDC. And then where it says tokenized deposit providers, it would be tokenized bank deposits, as per the trial or pilot that is taking place right now. But they will be, of course, programmable because they are tokens and they contain information, and they're all of the history is stored on that blockchain ledger. And then tokenized asset providers, you can see identified there as well. And that is government debt, tokenized government debt. Now, really what we're looking at here altogether is a closed system, almost like a kind of closed economy, a closed economic system, which sustains the unsustainable, which is the exponential growth of government debt, in essence. Because it means,
that's the reason. Yeah, that's the reason.
That's right. Because it means that once you're in this system, you can't leave without permission, because everything becomes permissioned, and so it all becomes almost self-financing. So you can imagine a situation there where, just using the image, that the central bank provides money to the banks. Debt, of course, then rises. So the banks then are incentivized to actually buy government debt tokens with that money. So they can then issue, or rather, if we just consider stablecoins, because they're also piloting stablecoins. And so this is another very interesting area, which isn't actually covered on that map there. But the stable coins in the UK that they're talking about would be very, very highly regulated, much more closely regulated than, say, for instance, Tether. And what that would mean is that you'd be able to have a self-financing mechanism for something like universal basic income, where the central bank can provide money to the stablecoin providers. They then buy government debt, and they issue tokens to the recipients of universal basic income. So they create the debt on one hand, and then they buy it back on the other. It's devious. It's quite ingenious, and yes, it's very worrying, because Larry Fink very recently, I put this on my X page actually, he wrote or said about making sure that people stay within that digital ecosystem. And of course, how do you get people to stay within that system? Well, you don't let them leave, of course.
Right. So as soon as someone has a digital ID, perhaps with this one login system, then you're in a way trapped, it seems. I mean, it's very difficult at the moment, as you say, for veterans and company directors to avoid it, because if you don't get this, then they will say, well, you can't run a company anymore, or you can't, access the benefits that are due to you from, doing armed service. So that's really a difficult thing. But, you've mentioned something there about it continuing an unsustainable system. I mean, to me, it seems it's already unsustainable, because government debt is just going up and up and up, and they keep having to borrow more money to pay off the debt that they've already got. But this just allows the whole system to balloon even more within itself. But surely there will come a point where even with this, it's not going to be sustainable, and it'll all just collapse under its own weight.
Yes, that's right. So in the sort of short to medium term, it's sustainable because of that sort of self-funding mechanism. And what they're doing, if you think about the actual background context here as well, David, is that they've been conducting quantitative tightening. So that means that the central banks have been selling off government debt that they previously held. So they've been conducting that since 2022. And that has caused various stresses in the economy. So, of course, we saw that with Liz Truss. The Bank of England sort of created that situation. We see it in Japan right now because Japanese central bank started to sell off their debt in 2024. And they're selling into a flooded market in essence. But that debt is, of course, not repaid. And so what is really taking place there is a redistribution of ownership of sovereign debt. So it means that someone else becomes the buyer of that debt and the owner effectively of that sovereign debt. So it's literally a change of bag holders for all of this debt. That's what worries me long term. And if you think about stable coins and what's been announced in the US under the Genius Act, which enhances the regulations behind stable coins. And of course, there's a lot of incentive across the developing world to hold digital dollars rather than local currency, which is depreciating at a much faster rate than the US dollar. So if you're in Turkey, if you're in Argentina and you're facing 20-25% inflation, then you don't really want to hold that local currency. You'd much rather hold digital dollars. But then what you end up becoming is a proxy holder of government debt. Because with a stable coin, just to go over the way that works, it means that when you deposit money, they then take that money and buy an equal amount of government debt with that. And then they issue those tokens to your account.
So it's all, in a way, a ruse for the central banks to get rid of, well, government debt and then palm it on to ordinary people or and other countries around the world.
Yes, it entirely seems that way. And what it also does is that because debt levels are obviously going to continue to rise, that's the nature of the actual operating system, money that's been created, debt-based system. It means that they always need to find new sources of absorption. At the same time, they seem to be cleaning up their balance sheets. And I find that dynamic very, very interesting. I was on a podcast recently with someone who's very pro-Trump, and they were saying, "Oh, well, this is a good thing because it's helping out these people who are facing such inflation." But that, to me, that ignores what those local central banks are doing in debasing, depreciating their currency so rapidly, and it also ignores that transfer of risk that is then taking place as they become proxy holders, indirect holders of government debt by holding these digital stable coins. And the last thing I'd say on the stable coins there is that while the stable coin issuers, such as regulated ones such as USDC and the unregulated ones like Tether, they hold the government debt, and it means that they collect the yield on that debt. Whereas the person holding the token, the actual stable coin, doesn't collect any yield on that. So it's essentially turning all this public debt into a private revenue stream at the same time.
So it's a massive money holder for the owners of Tether and whoever is in charge of USDC, etc., other stable coins. But for you and me who have got ordinary bank accounts, we don't get any benefit from it. We're just the people who get hammered with this new system that requires us to give our biometrics up and then be told that, well, you might not be able to buy this or that or the other if your social credit scores are not good enough.
That's right. Yes. And just going back to what we were saying about the unified ledger, they talk about this concept of the singleness of money. Now, the singleness of money, if we consider that today, well, cash on one hand, if you deposit your cash in your bank account, then they will be valued at par. Cash is equal to the digital money that also exists in parallel. So on one hand, you've got Bank of England cash money, and on the other, you've got bank created money, because the banking system creates the majority of money. But they're valued at par. Now, the idea of this unique ledger is that they also promote a singleness of money, and that is across the tokenized bank deposits, the central bank money, and the tokenized debt. So it means for the first time, we will actually be able to make payments via tokenized debt. And so not only will our money, as we look at it, if this system manages to be pushed through, and they get it all working, because it's not inevitable as much as they try and tell us that it is. If they manage to get that through, then when we open our banking apps, we may well have a combination of tokenized government debt, central bank money, tokenized deposits representing our digits that are on our bank accounts.
It sounds like a huge scam to me, to be honest, but but
Yes.
the system we have at the moment isn't perfect either. I mean, because it's all based on debt, as you say. I prefer myself, money that's backed by something, a gold standard or gold and silver standard. Do you think there's any way of actually going in the opposite direction to where we're going, so that we actually get back to money that's backed by something real and isn't created by debt, and then actually now going into saying, well, the debt can be used like money through tokenization? We need to go the other way, but is that possible?
Well, they're going to make that very difficult, because they really want to make government debt more integral to the whole system, because with a bank that has tokenized deposits within it, they are naturally incentivized not to continue to hold those tokenized deposits, but to transfer them straight away to tokenized government debt, because the bank can then collect the yield on that debt. And if that has that at par value, that singleness of money, then it's just making everything more what's the word, centralized around the notion of government debt ultimately. But at the same time, as I said earlier, the central banks have been trying to offload that government debt. And so longer term, yes, it becomes unsustainable, because you run out of new sources of absorption for people to actually hold that debt. And that's really where I fear the potential for expansion of the single unified ledger to include other assets. And that's my fear. So, but in the meantime, just going back to your question there, and I haven't really answered that yet, it's just the fact that they will target off-ledger assets. And I believe that they're doing that now, because what we're seeing is, of course, a de facto revaluation in gold and silver prices. And of course, these are more difficult to tokenize, but they're definitely tokenizing them. And, they're increasingly going to want to do so. So gold and silver in particular, because it's not regarded in the same way as gold as a store of value, but more as a kind of transactional metal. It's cheaper, it's better as a means of exchange than gold is. They want to ensure that people gradually start feeding their gold and silver back into that token, that whole ledger-based system, I believe. And of course, central banks have been driving the gold price up, together with private corporations, in my opinion, who are tokenizing gold. And so, for instance, Tether are now a very, very large holder of gold, increasingly large. And I think they're going to continue to do so because they can offer digital gold. And what makes gold acceptable to central banks and governments is the fact that they can tokenize it. So they can split it into tiny fractions. You can own a little fraction. You can get exposure to the price, but you don't hold the asset. You only have a claim to that asset.
Yeah. So Miles, this has been really fascinating because we started off with, people are concerned about the digital ID, the CBDCs, in terms of their, their privacy and their freedom being taken away. But what you're opening up is a whole other consideration, that it seems that this is actually not so much being driven by governments that want to take away your freedom, but by financial institutions that want to create a whole new financial system which allows them to keep on creating more debt out of nothing, and then milking the the interest payments on that, so they keep on enriching themselves on the back of basically what's funny money. It's just a system that allows them to get the money first, get rich, while everyone else gets poorer. And that seems to be, from what you're saying, the main driver of this.
Yes, and I think ultimately, as I said, they want to have all these assets on their ledger. They want to, in essence, and just going back to the image of the unified ledger there, if they manage to push through tokenized mortgages as well, that would feature under the tokenized asset areas there. And really what you're then starting to look at is a complete record for every individual of their balance sheet, their assets, their liabilities, and of course their transactional behavior. And that's all going to be sort of analyzed with AI. And you can see on the left hand side there, where it comes to the external information, that's slightly worrying, the imagery that they've chosen there. I see it as because you've got a satellite, which perhaps to me suggests some sort of potential for geofencing. You've got some sort of metric there being assessed, a water drop, and then what appears to be something like carbon being portrayed there. So this isn't terribly pleasant to consider, but I think, just going back to what we were saying about maintaining an off-ledger presence, of course, gold and silver still enable you to do that. Larry Fink recently has talked about $4.1 trillion that exists in digital wallets globally. BlackRock are trying to target that because they want access to those funds. They want that brought back into this digital tokenized system. So they're therefore offering tokenized ETF products, exchange traded funds, which track the price of Bitcoin. But it means that these institutions will then hold those crypto assets. So some people may consider privacy coins to be an option. But of course, they're not generally well used as a peer-to-peer means of transaction. And of course, there's the volatility that is actually within the crypto market. And when you have such volatility, of course, that ensures two things. It ensures really, number one, that you can't really use it as a good means of exchange, because you don't want to say, oh yeah, I'll pay you 1 Bitcoin in a year's time, because you don't know whether you're going to end up paying $200,000 for it, or whether it's going to be, $20,000. So, and then secondly, what that volatility also encourages is more participation within the stablecoin infrastructure as well, because it means that when the market is volatile, you want to take out move away from volatile cryptocurrencies and put it in a stable coin. And then when the market's rallying, of course, more people want to participate in that marketplace. So they deposit more money, and they'll then hold money in stable coins, just looking for a slight down movement before they put in more, and so on, and all of that, and the transaction fees and so on, all helps to actually reinforce stable coins and the acceptance of stable coins.
It sounds like a very well thought out plan that is going to take away our financial freedom and perhaps our personal freedom as well. But is there something that people can do to fight this? I mean, obviously, I'm involved in politics, and so I'm trying to get into a position where we can stop it through law. But whether I can do that or not, I don't know. I'm certainly going to try. But as well as political methods, I mean, do you think that works, and or it's possible to stop it through politics, or are there other ways that people can also fight this, by continuing to use cash, for example? I mean, that's an idea. Yeah.
Oh, cash is absolutely so important. We've got to really reinforce that our position on cash and demand that it remains available as a key fungible tool, a key privacy tool, so that we can conduct our daily lives as we see fit, and we don't have to face these sort of metrics that are suggested within that BIS image. So yes, that's of course important. Most fundamentally, the cornerstone of all of this is that interoperable digital ID. We need to be so careful about providing our information, and I think they will become increasingly devious in terms of the methods that will be incorporated here, and the behavioral nudges or even force that's actually applied there. So where possible, we've got to pursue paper-based alternatives. So for instance, if you're applying for a passport, it's more expensive, but they're deliberately trying to discourage people to actually apply for something like a passport via alternative systems. They want you going through the one login system and also providing your biometrics as well. So yeah, digital ID. But I think when it comes to the deeper consequence here as well, the whole monetary aspect that we've talked about there, just understanding that paradigm and having awareness of what's really taking place in the bigger picture, and how that's not just built for that initial three elements that I mentioned: central bank money, tokenized deposits, and tokenized debt. It's built for expansion. And we know the intention is to tokenize everything. They're talking about tokenizing nature, national parks, and so on. That's another means of actually ensuring that the governments can actually sell these assets off and get more debt and so on. But it's very, very dangerous, because ultimately what we're looking at is the convergence of late stage Western oligarchic capitalism together with extreme fiscal indebtedness and digitization, all coming together at the same time. And I think in addition to that, you could also add in the fact that they've almost reached extreme levels in terms of the data extraction they currently have. And data has just become so valuable that they want to almost effectively use that as a new form of collateral for growing debts. So yes, like, we've got to be aware of the consequences. And I think more people are really starting to actually say, do you know what, this isn't right. Like, inflation shouldn't be as high as it is. And we know the figures that they produce are nonsense. We know that, this notion of permanent fiscal crisis and so on, shouldn't be accepted. That we shouldn't be accepting just enormous migration taking place, and illegal migration and so on. So I think more people are starting to appreciate that. And I found that some of my friends who are less inclined to kind of be skeptical are increasingly actually being so. So
that's great, because they can see
yeah,
what's going on, even if it's in terms of just inflation going through the roof and being way,
that's right.
way higher than what they actually say are the
Mm,
figures. You can see in the supermarkets, prices of like basic staple items have doubled in the last 5 years. I mean, it's everyone can see that, and
that's right. It's undeniable, isn't it? Yeah. So I think really therein lies the great opportunity that we do actually have to actually start disintermediating this manufactured society, which is always promoting division, and is never focused on unity, because what they would hate, and it's no doubt their greatest fear, without question, is the idea of people coming together, and actually forming communities which can then become more self-supportive. Now, we do need to do some hard work there and look at ourselves closely in the mirror and say, right, okay, well, what skills can I actually start building? You know, what can I offer? But we do need to go back to basics a little, and that can just, you know, I'm not saying you're going to be self-sufficient like tomorrow. That's never going to happen. That's really a dream. But you can start to, for instance, keep chickens. You can start to actually look at food preservation, and just making little steps and start stacking skills, and working on your local community, and you know, just really trying to break down that manufactured society and the manufactured division that we see.
Yeah, they've atomized us and de-skilled
Mm,
us, really.
mm,
And
yeah.
that allows them to be able to make up these horrible, you know, pretty nefarious plans and push them through. So I think that that's the great advice to people, to try to get back and build communities, reskill, use cash. Don't get digital ID if you can at all help it. Use paper-based methods to interact with the government. That's very good advice. So Miles, thank you so much for your great insights into this and your knowledge. And you
Well,
know,
likewise, and all the work you've done over the years, David.
oh, thank you. That's great. Oh, well, really good for you to join me on the show today, and everyone who's watching. Thanks for joining me again today on Right Think. And Miles, before we go, where can people find your videos, your information that you're putting out?
Yes, so I've got a lot of videos on my YouTube channel which goes through, yeah, all of this in quite a good bit of detail. So if you just look up Miles Harris, then of course I'm on X and Substack as well. So
Great.
yeah, find me there.